Hello and welcome again to the next live stream. It took a little longer. I didn't come back online at, you can see here in the corner down. I said I would be back at 3, but I was here watching the market, didn't do anything. Because in my former live I said we would see a dramatic drop down. Even had a possible idea of going long, but because I wasn't at the charts and with the meetings, I wouldn't even put a limit ever. So, but you see what happened. We had an immense crash from 124 somewhere to this was the accumulation zone that we had. Wait, let me put time back on Madrid for a second. That what I say is correct. So we had the accumulation zone here, then we had a huge drop at 12. Let me go to the 5 minutes, it's clearer. We had this accumulation zone, then we had the huge drop with the news and everything. So wasn't really a good time to search for longs. I don't even know if it's a good time to buy now, but price dropped immensely, and what I see is we have a lot of equal lows here, and price seems to react here as if it was some kind of support. So how I see it, support also attracts price to go a little deeper, take out all the positions and then go higher. But for now I'm just waiting on more confluences because I got a long position prepared. But as you can see, it's a very tiny stop loss, and as I said, there's money below, money below, money below, money below. So let's wait and see. I'm gonna, because when I started streaming, then I had to close a few other things. Let me open this again for myself so I can trade when the opportunity arises. I want to see this here on the 2-minute level. We have definitely an internal bullish market structure shift, but again in an accumulation zone. I'm a victor, not a victim, so I'm always careful. Look, we had a bullish move here too. No market structure shift, creates a fair value gap, taps in and randomly gives 30 pips. And this is happening again, but this is happening here now. We have another bullish fair value gap here. And this took out a lot of short positions this high. And then we had again the creation of more sell side liquidity. After this is taken out, there's more stops here. So for what I think is, before we see a push to the upside, I think we should go further down first. So actually it would be better to go look for shorts in this fair value gap or this one. But if we would put a fib from here to there, the golden zone would be here, and that is about 80 pips away. So if you believe that we would go short here, or even 50 pips higher off where we are now, or 60 pips higher than 50, 60 pips out. Sorry, if you believe that we gonna see a possible short position at those highs, then then there is first an opportunity to go long. How do we capitalize on that long position? That's a whole other question, of course. We need to see enough confluences now that show us that we are on the right side of the market. And with you see the accumulation zone from London lunch here. So this was a small push-up. I wasn't here anymore, I was out. Here I was out. Then we had 2 a.m. meeting, didn't bring a lot of liquidity. The 2:30 meeting didn't bring a lot of liquidity. So what do we have here? Let us quickly check. We have crude oil in 6 minutes, and because of this FOMC meeting minutes, the market is playing us a bit, so I rather be cautious instead of taking unnecessary risks. Already had my losses for today. My daily risk is already at its limits for so far, so another day, other opportunities. So or we take a good setup with confluences, or we don't take one at all. My preference would actually go, you see here the purple in the corner here. Oh, if we put this quickly, look, if we see the purple line here, we have a fair value gap below, and I'm gonna change this color quickly in something else so it doesn't confuse us too much. In a green one, okay, we leave it green. So we have all these equal lows. As I said earlier, this is sell side liquidity. If price would go below and all these stops here jump, you know, like retail now is going long here, they're putting stops at this level. That's why I don't like the setup. I'd rather go look for something like this to go long and expect that, look, you have the 23 at the purple line is the 123,000, and that's the bottom of a former demand zone. So if we would have a tap here, then we could see a possible jump up going after this. Because there's a lot of money here, here, and here now. So the best way would be look for a short, but because price already dropped so much, I'm more in the opinion of looking to buy, because if we get a reaction, then 9 out of 10 it will be an explosive one. So let's see, this level also interests me. Look, we put Y because we have again the blue box, and that's my blue line, a blue box theory. What is the price of the blue box? This is 22,450 around. Do I think price should go there immediately in one big drop? No, not necessarily, but let's just wait and see what the market offers us. I'm gonna move this on the other screen. Gonna do some things there because I already put a stop loss to take a trade, but I'm gonna stick to my plan of 29. Let me see where I got of 23.27. That's not even deep enough. So for what I can see here now, I would say 22.5 or 400, but for me that would mean a 10k stop from where we are now, and that's a decent stop, of course. 22,400. So at least we are prepared. We have the stop where it should be, so we don't become liquidity. And what do we do now? Now we wait. 30 crude oil. Look, crude oil doesn't give really an impact. You see the meeting time 4:30, so it's a medium volatile meeting, an orange folder, and doesn't do anything at the market for now. So let's wait and see. I want to see just what price wants to do, because if it keeps trading sideways and we close the kill zone, then we just don't do anything. But it's logical, there is a lot of buying volume at the emotional price level of 123,000. So this would be a potential risk we could take. Let me change this here to check. That would be a stop of 7,000. That stop loss would cost me 7,000 from where price is now. But we don't enter now, of course. We're gonna look at the other chart. Put a stop the same 22,723, and then let's go check where would we enter at 3,000. Would be a stop of about $3,000. That's acceptable, the risk. I know it sounds crazy, but you get used to these numbers, and even there's people that even trade crazier numbers than I do. So I'm checking. Let's see. receiving some messages here. Vale, speaking sometimes Spanish. Let's see. That's okay. Then let's. Okay. Let's check, because I got a lot of screens here in total. 1, 2, 3, 4, 5. Okay. Oh, nice. So where were we? We're looking here now at another potential drop, but then I expect some kind of bullish move, because you see this would be, and let's draw there with pad. This is my blue box theory. I really believe that price should come here, but in order to do that we need more liquidity created in the form of this. I think would be definitely a possibility. Why? First of all, this is a higher time frame fair value gap, and price is already slowing down. It's not like we're selling heavily anymore. So that's a possible outcome. There's many, of course. We could also see this happen immediately. A breakout on the trend line, tap into the 50% here of the daily candle. That would be equilibrium, and from there see another drop down. So a lot of speculation and a lot of money below these lows. So my guess is we take out the lows, have a push up and go after this. I only want to take, if I can take 20 pips today, I would be happy. So let's see, this would be a 25 pip stop, and if we can take a one-on-one, if we can find an entry somewhere here and take 20 pips, that would be awesome. If price keeps running up, we work with a trailing stop and we wait until this liquidity gets hit, because there's money above this point, there's money above here and money above here, so we could definitely see price run back up till here, at least 80-90 pips. But I think it wouldn't be logic to let all these people that are early long, to let them win. So that's why I believe we have to see a drop in price first before we even consider going long. And you see the lower highs, equal lows, lower highs. You know that's like this type of liquidity that we're seeing being built, generated, built. A breakout to the downside, another breakout, a strong move up. This would definitely be a considerable good position. And why the purple line? Because it's an emotional level at 1.23, but who knows, can be that we just tap the stops, take the stops out till 123.100 and we see a reversal or a complete drop. So we're reading what the market is doing. We're not pushing any buttons. It's not financial advice. I'll write it here in the video so that it's clear that I told everybody, not financial advice. Not financial advice. You see, not financial advice, I told you so. So don't take any decisions based on my videos. That's the whole point. We're just looking to the charts, sharing, and I noticed, I thought it was different, but it's better for me to live stream. Then I have to take myself accountable for what I'm doing. Like this morning I was just scalping and didn't really think too much about it. Cost me 20 pips, a little more. My behavior, my trading behavior is even better while I'm streaming. So I'll take that as a compliment for myself. Now I'm gonna take a quick 5-minute or 2-minute break. Nature calls. Be back in a minute, and keep watching price. Don't do anything less smart, okay? Here we are again. Like I said, wouldn't take very long. Nothing really happened. So we are waiting now to see if there is some kind of breakout, some kind of move that we can base our decision on. And if I'm looking here on the other screen, let me change that again. I'll change this here. You can see on the hour chart how we already dropped, and you see the reactions begin to come. The liquidity out of this candle has completely been taken, so it could push potentially down, or let's take that and draw what I mean. Look, this is definitely okay. Let's start again. Computers and there. So this is definitely a possibility, and that we see a candle form with a wick. You know, the TP never is important to me. I trail my stop in profit. Once the trade goes well and we have a setup, we're in the market, then we wait until price goes in our direction. We analyze the new market structure, where price should go. If we get into 20 or 15 pips of profit, then we can take profit from one position, maybe from two, and we let one run with a stop loss in profit, so we don't have to repent later. But this would definitely become to look like a possible new profile for tomorrow, because we're drawing lines into Thursday here. You see down here Thursday. There's also something in the market that I noticed. If the market goes down 3 days or 3 days up, you can expect one counter day. And it's not always sure, but look, we are going down now since Tuesday. So Monday we closed here. So Tuesday, Wednesday, Thursday, maybe Friday will be the bullish day. So we never know. We don't have to know. We have to react instead of guess. And now just be patient. No? Practice patience. I'm gonna put this on 3, and we get back into the minute here. Oh, shouldn't move that one. So let's see and just wait. Another day in front of the charts, spending our time wisely. And as long as we don't push buttons, there is no risk involved. So I'm watching my other charts too. Price still is looking for a better discount. So I really think it's gonna drop to an old demand zone. And that demand zone for me would be around 123. That's probably a zone where I would just buy. Wait until we drop below you see the reaction, and then you know price is gonna go up. But that's not based on intuition or anything, it's just based on logic and based on experience. Oh, damn. Long days, long nights. Let's get back into psychology while we wait. So, if you see the accumulation zone that we are again in, and it's been a lot like that the last days, accumulating, and heavy drops. Why is that? Well, in 2 weeks, Trump will get into office, and that will give a lot of investors confidence to start buying the dollar again. And that means that the Dow Jones, the dollar index, should go up, and that affects all the USD pairs. So even the USDT pairs like Bitcoin and ETH, XRP, but also means that if people have more faith in the economy again, that we could see a market, a bullish market, and we have to take that in account. The bigger institutions, if they know upfront that the market is gonna climb like several, like for GBP, if the market is gonna go up to let's say 130, 128, yeah, then for them it's interesting to buy now. And it looks like a sell-off, but they're just smart money that has no limit in waiting. They can accumulate, hodl on different price levels. They don't have the same expectations of the market as retail does. We want to make a quick profit while they are looking to maybe 2-3%, 7% a year, 20% a year, like for Nasdaq and the S&P 500. Those are huge numbers on the scale that they invest. You know, if you can invest, let's say, $100 billion, and you can make 10%, that's $10 billion profit. Those are good numbers in comparison to what we are looking for. We are looking to what, in a good day trading, 1, 2, 3%, 4% sometimes, and we're thinking on risking 1, maybe 2, 3%. I risked like 2% this morning of my account, so that's not even a lot, but like I said, it wasn't the time to go all in and push the account to the limit. Luckily I didn't do that, because a little bit of common sense, trading against the trend. It's good for a scalp. Take a quick profit or lose a small amount, but keep your net value positive. And to come back to the whole idea, if if you can make, let's say, 7% a month, 10% a month, that's an average, of course, that's 10 times more on yearly basis than what institutions are even looking or aiming for. So it's logical that they play their game on different levels. You know, what they buy on 123 500 here, if they can sell that with 1% profit, calculate 1% on the amount, that's okay for them. So whatever they are buying now, if they can sell that later at a small profit and they can sell their whole bag at a small profit, then who is buying? Retail? Small investors? So you always have to think, what is smart money doing? How do institutions trade? What are their goals? What do they aim for? And if the DXY is going up, then we probably gonna see more downside here on GBPUSD even. So USDX going up, then all the USD pairs go down. Just speaking market logics. So if smart money is now what buying, then they won't be able to sell. So it's actually them selling now. And getting rid of their bags. And if the DXY would collapse, because I speak a lot with other investors, long-term investors in other markets, like Trump could be the recession president, meaning that he could be on the 4th page of a global recession where the DXY collapses and all markets, all USD pairs go up, and that would not be bad for the economy, especially for us if we know that the DXY is dropping. Yeah, then it's simple, we only looking too long. But for now, you see on the chart, it's again like accumulation. In this type of markets, I don't trade. I just sit on my hands and do nothing. And one of the next days, we will definitely see good opportunities present themselves. So no worries. If you live from trading, you gotta learn to manage your emotion and not think like, oh, I lost 2% today. You'll make them easily back in another good setup. And that's, especially to myself, I'm confirming that now. So I know that it's possible and it's not that hard. Sometimes you just take losses. I had a winning streak of since the end of November. I closed 3 weeks, 4 weeks in profit. 1 week, 2% profit, just 1%, 3%. Then the last week, Christmas, I didn't trade. And the first days of January, last Friday, I closed with 0.5% profit. So it's all good. No panic, because you always take losses. It's typical on trading. If you see these gurus on TikTok or on YouTube telling I have a winning strategy of 90%, then be sure that they're gonna try to sell you a course. And a trader that makes money doesn't try to sell you a course. I'm not trying to sell you a course. I'm speaking here especially for myself, just because I like streaming, and I know that if I'm gonna be doing this for a year, then my views, my likes go up, and probably YouTube gonna pay me for views, and that would be a nice addition. But in the end, my goal is mainly if I can help a few people for free to become better at trading, like the luck that I had with one of my trading buddies out of a chat group. He taught me a few tricks, and we met in a chat group, and it's a long time ago. We met in a chat group, started talking and started chatting in private about Forex, of course. And he asked me like where, and I was there, I was only trading break even then. And he asked me, how are you trading? Why are you? And he was helping me out. And I thought like, damn, this guy is just curious. But no, he made me think about what I was doing, and he kept me accountable. I felt accountable because we were sharing information, and it just made me a better trader, having people or somebody watching my positions. Because if I took a loss, he asked me like, send me a print screen. And then he asked me like, why did you take that trade? Why did you got out early? Why did you put your stop loss there? And it really changed my complete perspective on my own psychology, on my interaction with the market. Like, what are you guys trading? Are you trading the market? Are you trading your P&L? Are you trading your account? Those are complete different aspects and ways of interacting. Because look, the example is I know I trade the market, and I trade my setups in the market, none depending on what my account is doing or what my P&L is doing. So that means if I see a setup, and like today taking 20 pips loss, many traders have the mindset of, oh, I need to make those 20 pips again. That is trading your account. You want to go to break even. So then you go to break even, you close a position, and it goes 30, 40, 50 pips more up. So you're trading your account and your P&L because you just want your day to be net break even or net just about positive or below the minimum negative. And another trading buddy of mine does that. He's currently in a position like I think I can't see it now, he's not around to ask, he's offline. But this morning he got into a position 60 pips in negative, and he was saying like if the market comes back close to my entry, I'm getting out as close as possible to break even. And then I'm like, why did you take the position in the first place? Why do you have such a big stop that can put your account in serious problems? Yeah, it was a good no, it's not a good position. You should close early. Like my first trade this morning, I took a 11 pip stop. And I was even thinking on getting out earlier because I saw that market structure was going against me. So it would have, I would lose 3 pips less. But then the market moved so quickly that I was tapped out and I didn't even have time to think about it. So okay, no problem. 11 pips in the first trade. Then in my second entry, I saw the market change and I thought like, damn. And I get in and I'm like, what are you doing? And my mindset is speaking to me like, what are you doing? You are trying to get in without enough confluences, and to punish myself, even knowing that the trade could go right, I had to close it. Because I don't want to be rewarding myself for bad trading behavior. And now we're talking high-end mentality change, where you are positively working on yourself by doing something that affects you negatively in finance. So it cost me another 4 pip stop. And okay, wasn't my setup, so I acted accordingly because I knew it was a trade based on emotion instead of on system and logic. And that good behavior gave me a good feeling inside, like, look, I'm becoming more and more and more and more realistically professional every day. Because for the people that are listening or gonna watch this video in the future, answer this question for yourself. You take a second position because you truly believe that your first entry was still okay and you should have just put your stop loss or made your stop loss bigger, and now you see the market change character again and go in your direction. You enter and the market changes again. What do? Do you wait until the market goes after your stop, or are you big enough and mentally prepared enough to say to yourself like, look, this is what happened, I am wrong? One of the biggest fears, I don't know, we don't have it on the board anymore, yesterday we wrote it on the board, the fear of losing. The fear of losing would tell you like, oh, but it can go my way and I can get out in break even or even in profit. And it's actually your greed, your psychology, the greed speaking on fear-based emotions. The fear of having to admit that you acted wrong. The fear to admit that you made mistakes in analytics, in psychology, in market structure, and that actually is an attack on your ego. But who is attacking your ego? Your own behavior. So if that position goes right, you are telling yourself like, look, I can do this. It will go good like multiple times because I've done that before and it went well. No, bad behavior should be acted on. And I'm not saying that you have to punish yourself like in the school system, but learn to be consequent. And you say like, look, I shouldn't take this position. It's gonna cost me this, and it's gonna cost me affirming or confirming to myself like this behavior is non-professional, and you learn to act upon that. You become more professional. Logic, you can all follow the way this works. Okay. And then my third trade that I took this morning was actually a nice A plus setup, not an A plus plus plus, but because my belief was that the market should go up before it came down. When I took that position, I had something like, look, I'm buying here in the best position ever for this trade, and I put my stop in 6 pips, and the market went against me, but it was a good setup. So that's what I mean. You are, as a trader, you become better by working on yourself. And if I'm going offline in a bit and I'm gonna analyze what happened today, I'm gonna be happy and grateful for becoming better, and I accept losing in trading as part of the business. If you own a retail store and you invest in bananas and you don't sell them all and you have to throw them away, you're also making a loss. But in that type of business, people don't have a problem like saying like, I can't use these bananas anymore, I'm throwing them away. And yeah, we lose money, but it's a business expense. Well, losing a trade is also a calculated business expense. So if you can take a calculated business expense admitting that you were wrong, then you're growing as a businessman and as a trader investor. I can only cheer that. I can only say like, well done, good behavior, and up to the next trade. And like this afternoon we didn't take any positions. Why not? Because look, what are we gonna trade there? What is presenting itself as an opportunity? For me, really not a lot. And if we see like I always say, 10 pips in a day is enough, but we couldn't know this was gonna happen here. That would be gambling. Taking this position, that was a possibility, but I wasn't online yet. I only came online around 4 o'clock. So this would have been definitely a possibility, but if you see on the higher time frame, you see 1, 2, this is where I would expect price to go down after the stops, but it didn't take out the equal or relative equal lows here on this support level. just decided to go after these highs here and come down again. But how can you trade this out of a smart money mindset? You can't. Out of a retail probably made money today, but the day traders and the swing traders that are looking for positions, the day traders, they're probably in somewhere here. If they took this, oh sorry, they're probably in a position like this, going after there. We were looking for the same type of setup, that's why I know. And what do we have? We have an FOMC meeting at 8 in about 3 hours, 2 hours 30. So what is the market doing? Generating liquidity. So people that took a position here, or maybe even like this, they are just in net positive with a high risk. I'm not interested in that type of trading. So, but guys, you see we're getting close to the London close. That's my time to say like no thanks anymore. So I'm gonna go offline. Gonna thank the people that watch this video now or later for your attention. May we hope you pick something up, especially on psychology, because that's what I'm talking about. Technical analysis, you can learn that everywhere from everybody. I love, of course, talking about the technicals and on market structure too. But I think it's more important that as a trader that you work on your mindset. So if you got questions on mindset, or you want to speak with somebody about your setups and how your mindset affects your results,